Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel known as Trader Talks. I am your host, Kevin Horner, for our next segment after the close. Thanks for being here, everyone. We'll get down to business here momentarily as we are going to provide or build rather some new example trades in the example portfolio today, building on a couple of opportunities that I have come across in the market today. Just again, from example purposes, trying to see about setting our table for tomorrow based a little bit on today's price action. So we'll do that in today's class. We will also spend a good portion of our time working through our existing example portfolio with open trades that need to be addressed, meaning we're going to look to see if we, one, if we have exit strategies applied to our trades. Two, if a majority of our profit opportunity has been achieved, we may choose to close those out. Or three, we may be looking to raise stop orders as an example of trade management along the way. So today we will make a couple of new ones. We will review the example trades and manage those along the way. So hopefully plenty to be gained from today's discussion. I'm going to say hey to our friend Scott Thompson there in the chat. He's going to keep an eye on all of you. I have no concerns. You all are fantastic as always. Of course, I see a lot of familiar names here with individuals who like to participate and join these classes frequently. So I appreciate you all being here this afternoon. So with that, I'll just remind you that you can follow us on X. I'm available there at Kevin Horner CS. Would appreciate a follow there because I do try to post for you throughout the week, put in some new charts today as well, some things of note that traders might be paying attention to. So always a good way to engage with us coaches outside of the classes that we host for you here. With that, let's review our disclosure so that we can get down to business. First and foremost, remember, our conversation is always exclusively for your information and your education. Simply put, we are not making recommendations. We are not making endorsements here. We will note that we discuss technical analysis quite a bit. Remember that these are merely concepts and strategies traders might choose to employ. By no means are these recommendations for you to employ them. However, we also discourage you from basing your decisions exclusively off what you see in terms of technical analysis. We do think, though, it can be a part of your overall puzzle for making your decisions. One last note here, is always important to remember that options carry a higher level of risk and are not appropriate for all traders. You do need to be approved on each individual account in which you may like to trade options. You can have varying degrees of option approval on those various accounts as well. One other note, we work in the desktop Thinkorswim version here, known as paper money. What that means is that it's very much simulating a live version of Thinkorswim. However, when you are selling options in Thinkorswim paper money, you need to know that you will never receive an early assignment on those short options. However, when you are in real world examples, you absolutely can be assigned early on any short option contract, whether that contract is in the money or not. So please be aware of that. If that's of concern or you have questions, excellent topic for conversation. You can always reach a representative open to discussing options with you 24/7. Never hesitate to reach out and have that discussion. All right, so we are just going to dive right in today, everyone. We have some ideas for example trades, a couple of key ones that we're going to work with. So we're going to start off by looking at CrowdStrike today. Now, CrowdStrike today, I'm going to pull up, has a pretty fantastic candle if you are looking for bullish potential opportunities. One thing that stands out on this candle, of course, is the enormity of it. The height of this candle is pretty dramatic. We opened basically at the 200-day moving average. Our low today was 409.25, and we closed at 442 even, basically at the high. We missed closing at the high by 17 cents. So that is a fairly bullish view of things for a couple of reasons, not the least of which is the fact that the stock is closed now at the highest price it has been closing at since back here on August 6th. So you are looking at a 3-week high close here on CrowdStrike. Additionally, many of you who've been trading for a while will make note of the fact that after a pullback if you receive a candle like this, where the entirety of the day action today encompasses the entirety of the prior day action, or in this case, the entirety of maybe the last 4 or 5 days of price action, these are known as bullish engulfing candles, engulfing in sense the prior price action. Now, traditionally, we will look for these on a 1 to 2 day basis. Does the current day candle fully engulf the price action of the prior day? And it can be viewed as a potential trend shift, sentiment shift. And ultimately, that's what we're getting out of this candle today. So when we think about this candle, many traders will look at this and not suggest that you have immediate upside that we have to go back to, very quickly in terms of the prices here. Last highs, the highest close we've received, let's see, was about 518 or just shy of it. Our close here was 509, and then the next day was really low. We had a huge moving low candle. So really about 514 to 515 might present as an area for potential near-term targets or resistance. At least if you're bullish, as an example, a trader might say, well, we pulled back to a major portion, a major level of support, in this case, the 200-day moving average. We could even strengthen that if we wanted to with a couple of key details, one of which could be a Fibonacci move off of our last low back in April. This is a reminder, this was the same day that the broad market made its low. And so you'll look at this as such. You might draw it from the peak, the trough to the peak, and then you'll notice that we basically pulled back not just to the 200-day moving average in 408, but the 50% retracement of that entire upside move. And so many bullish traders, when you have a bullish trend in place, what they will look for is an appropriate pullback to an area of support. And if that appropriate pullback is coincident with a level of support incorporating a Fibonacci sequence, it may very well give them added comfort. So if we're looking at this and believing, for an example basis, that we may have some more upside from this new trend, or that the old trend that's been working is still in place, which we could basically draw from the lows in September of last year and suggest that, hey, we didn't violate that uptrend and we pulled back to an appropriate level of potential support. A lot of traders might look at this believing that they have an opportunity between now and maybe the next earnings window. And of course, today's move largely on earnings today. In fact, I want to give you 2 pieces of detail, or 3 rather. We do have some analyst details. Jefferies reduced the price target on CrowdStrike from 530 to 500, but they maintained their buy rating. Bernstein then lowered their target on the stock from 371 to 343. Doesn't seem to be pertinent to the current price action, of course, but that's their view at Bernstein. They maintained a market perform. And then Canaccord also lowered the target on CrowdStrike, this one to 430, previously had been 475. Now, I wanted to give you all that context so that we could consider utilizing the price action as a means of building an opportunity for the trade. Now, a couple of things stand out. Besides the pullback to the 200-day moving average, a very long-range moving average, we also can make note that we had big volume in the last couple of days. Now, what's interesting about that is that, of course, we had earnings yesterday after market, and today's volume was substantial, but so was yesterday's. And notice, if I zoom in here, boy, there was not a lot of price movement there yesterday compared to today, which might suggest that somebody was a little bit aware of what to expect here in terms of today's price action. So this could very well act as a bit of a springboard for a potential move over the coming weeks. So if you're a bullish trader, an example trade may be to incorporate a long call with a short call at a higher strike price, a long call vertical spread, for example, that may allow the trader to pick up some of this range. Now, an approach that many bullish traders will use here is not to expect the move back to 515, but to take a casual or comfortable move opportunity over what could be 4 to 8 weeks so that it does not encompass the next earnings window, which we would expect about 3 months out near the end of November. So that gives us a few series of strike prices for consideration. And our closing value at 442 may give us an opportunity not to look at, say, 440, which would be in the money, but maybe the trader wants to incorporate a little deeper in the money opportunity on the long call side because they may want a higher delta. So let's take a look at the strike prices on CrowdStrike, and let's open this up a little bit so that we can, I'm going to drill this down into fewer contracts so that we don't have so much to look at. All right, so here we are. We are at the October series. That's 50 calendar or trading days, 10 weeks approximately. And, you know, a couple of things stand out. One, we could go to the November 21 window, but that's just going to give you more time. Notice the implied volatility here is very much lined up, or very close to lined up with the same implied volatility for the October 17 date. So those are very similar in nature, but you're adding 35 calendar days. It's not to suggest that a trader couldn't consider the November calendar window, right? But it is adding 35 days, and that's going to add cost. So let's look at something akin to, in this October 17 window, which is going to give us 50 trading sessions approximately. And we also mentioned the likelihood of wanting a deeper delta or a higher delta so that we're getting more opportunity if the stock moves in our favor. And again, we're leaning in to the belief that with today's volume the last couple of days, institutional investors likely, not likely your average retailers like you and me. So there may be a developing bounce in place here, and that volume and candle today could play into that. So if we wanted the higher delta opportunity, a trader might look at the 430 contract, okay, which is going to give us a 62-cent delta. And I'll just remind you that a 62-cent delta implies a couple of things. Number one, it could be considered the percentage of likelihood that this contract is in the money at expiration. So 62% likelihood that the stock is above 430 at expiration. But it also is the equivalent price value movement in the option relative to an underlying move of $1. Meaning if the stock moved up by $1, we might expect 62 cents would be the increase in value to the option contract. So if we like that thought process, incorporating a 430 call, which is about $12 in the money to get us started out, and we thought that it could go back to that 515 prior high, but we don't want to be stretched to needing it to go to 515. Maybe we want to go to something like only 460, which could be very limiting, right? That's a $30 spread. And some traders would say that's not what I'm looking for. I want a wider spread. I want more upside opportunity. And traders, that's on us individually, right? We need to decide how we want to approach that. I think for our purposes here today, we're going to go with the $30 spread. And the reason is, as I look at the cost, we have an opportunity here for about a 1-to-1 risk versus reward scenario. We can spend about $14 a contract. Let's get probably up to $14.50. Okay. And I'll remind you that if we spend, if we have a $30 spread, a long call vertical spread here, we can make $30 between them. If it can run through 460 on expiration Friday, well, then we stand the opportunity to make $30 in the spread discrepancy, 430 to 460, less our cost, about $14.50. So we stand to make potentially $1,550 versus our cost of $1,450. That might line up with some traders' risk versus reward. So we'll put this on. Before we do, I'm going to just highlight what we're looking at in terms of price action, okay? I'm going to put a line here at the 430 ledge so that we know the level above which we wish to maintain, right? We basically need to hold the 20-day moving average, and then I'm going to duplicate it and I'm going to put it up to 460. Now, a lot of traders are going to notice that location is the 50-day simple moving average. There's a potential that we can't break through the 50-day, hence the opportunity maybe looking for that $30 spread rather than something wider and going to say 470 or above. Some traders may just be fully comfortable with the opportunity to move from where we are up to 460 or so. All right. So be thoughtful when building this out. It can always be advisable to make sure that the levels that you're working with on your spreads make sense in the chart as well. So let's go ahead and apply that. We will go for a limit of better than 1450. That, of course, is or better. And we are giving it a little bit of a padded limit because we know we're after the market close. If traders, if you wanted to give yourself a greater likelihood of this trade executing tomorrow morning at the open, well, then we probably need to kick this up a little higher. And I'll just remind you, when we go in at $14.90, not quite $15, but we can go in there. And remember, if we said $14.90, that is considered or better. So if the limit price at the open was $14 even, well, we're going to get 14. We're not going to pay a higher rate because we wanted or we gave it a wiggle room. We're going to get the or better price, whatever that comes out to. All right. So we know we don't have a guarantee of execution here, but we do know that if we get executed, we won't pay more than $14.90 to put this spread on. All right. So that's what we're going to do. We're looking at max profit of then $15.10. Max loss is the amount we outlay, assuming we do not have any assignment or exercise on these contracts and resulting in us taking on stock. So that's what those limitations are. All right, we'll go ahead and send that one in. And now we've got a live order for tomorrow's business. So an example trade in CrowdStrike built on the back of a fantastic trade move today. Excellent candle, bullish, engulfing candle through an area of former resistance at the 20-day moving average. Could be really interesting to monitor this one over the coming weeks, everyone. All right, I see we've got an opportunity for a survey. I'll just remind you all, this is at your discretion. You don't have to do it right now, but if you click the link right now, it'll open up in a browser window right next to this one in which we're presenting, of course, and that'll just give you the chance after the class to go in and give your comments or a score if you prefer. You don't have to make comments, but if you do, I promise to read them. They'll come to me directly, and I always appreciate the feedback. I recently learned that there are some things that I need to be working on, and I'm working to incorporate those changes into my hosting. So your thoughts and your ideas have a lot of merit for me. I'd love to hear from you, everyone. Thank you. Okay, let's kick off to a second example opportunity today, which we are going to do via the 50-day moving average pullback scan. So first of all, let me jump back to my scan tab. And I'm going to highlight that this is a scan that has been built previously and one that I'm using. I'll give you an opportunity to utilize this if you'd like. I will share this in the chat, everyone. So I'm going to share this query with you. And let me explain it as I do. First of all, I'll let you know that the 50-day pullback scan, we can't guarantee it for accuracy or timing. It's not a recommendation for your use, but it can be potentially something you incorporate into your scanning of the market to see if maybe you can generate some opportunities or ideas. Now, I will, if you're catching this segment in archive, check out the show notes. It'll be down beneath in the show notes as well. That's that specific grid, everyone. So keep that in mind. And then what I've done, as I will navigate over to the charts momentarily, I have loaded this as the 50-day pullback scan. So I went into my watch list and I had it listed here. And the reason I know it's the scan one is because of that target in pink. So that lets me know that I've got one of those dynamic scans. This can be really helpful during the average market day because as stocks meet my criteria, they get added to that watch list. And as stocks get removed from that, they miss that criteria or one portion of the criteria falls off, they get kicked out. You can even tell this platform to notify you when those results change. Okay, so give consideration to that, everyone. Very popular usage of this portion of the watch list. Certainly one that I rely on quite frequently. Now, what are the criteria we're working with? Well, we're looking for stocks who are trading above at the close their 50-day moving average. Now, I got to let you know, intraday, if you're using this scan tool, intraday, the close is considered to be last trade. So yes, it will look at yesterday, but right now it's just looking at, did these stocks close above their own 50-day today? Additionally, we want to see a stock whose 50-day moving average is above the 100-day. And that's important. Let me highlight this because we want to have a stock that's in the midst of trending upward. We also want to see that the low today was below the 50-day, but the close was above it. So this is ultimately showing us a potential of stocks that have tested their 50-day by being below it intraday, but closed above it at the conclusion of the trading session. Now, the one that popped on my list today that I found intriguing from this standpoint, everybody, is the Hologic. I'm going to try this one more time. Hologic, I think is the accurate pronunciation. HOLX. Now, we're going to talk about this one as an example opportunity because one of the things that stands out here is that the stock has been in a bit of a downtrend, right? We have a 200-day moving average that is downward sloping, but we do have an orange 20-day upward sloping and a purple 50-day upward sloping. And what's a little bit interesting at the moment is the fact that we've got the 50 crossing the 200 to the upside as we speak. Now, that doesn't mean that this is absolute to work in our favor as an example opportunity, but it could very well be the beginning of something bigger. So some traders might look at this and say, well, if we are getting a 50 moving average crossing a 200 to the upside, we could be looking at the development of a longer trend or something longer than a short-term trend developing here. And so one of the ways we could consider an entry opportunity on HOLX might be to define today as the low of a pullback after having traded up to, this ledge here around 69, but not being able to get through 69. But today is the lowest we have seen in price since making those highs. Now, if that is a good low, if today's low is a good low, well, then the very first thing we need to see is the stock trading above today's high, which was 66.73. And so some traders might look at this and say, hey, we could have an opportunity for a bullish trade if we can have Hologic's trading above today's high. So again, today's high came in at 66.73, and some traders might want to use a variation of that level, meaning maybe they want to see 1% through that high price to validate entry, right? Some of you traders are going to say, that's cool, Kev. I need a second day or a third day, or I'm not even going to be comfortable buying at this area of potential support. They may want to see a breakthrough 69 and be buyers, okay? But we're going to build a trade nonetheless with the idea that we buy if we see this trade above today's high. So consider that. Let's use today's high, 66.73. So we're going to take my handy dandy calculator, 66.73, and let's suggest that we move through that by 1%. All right, so I'm just going to take that amount, multiply it by 1.01, and I see that means 67.40 approximately. Now, that tells me that if we traded through 67.40 intraday, we would have been 1% above today's intraday high. And that could be validating for some traders. My encouragement is not to use 1%, everyone, but rather to define what percentage, if any at all, you want to work with to give you confirmation for what could be considered early entrance. Okay? Doesn't mean that's proper. It doesn't mean it's going to be right for all of you. But I think if you consider that 67.40 is about $1 above today's intraday high, about 75 cents above it, some traders would look at that and say that's validating sufficiently. Not everyone, but some traders might. Okay, and so that's what we want to use for this example trade. And we're going to actually suggest equity purchase. So just shares of the stock on a buy stop. But let's do that and then also set a secondary level. So we're going to do two examples. The first is going to be a buy stop if we take a 1% move through today's intraday high. So that's going to be a buy stop at 67.40. All right. And instead of doing 100 shares, we're going to do 50. And the reason we're going to do 50 is that we might want to add another 50 if we move to new highs. Okay. And those new highs would be through 69. But again, we're going to want through 69 by at least 1%, which could give us a better confidence that we have a new trend continuing. So we're going to go 69 times 1 additional percent, which would be $69.70. So we're going to place two separate trades, everyone. Both are going to be buy stop orders, and we are going to subsequently look to protect those orders with an exit strategy that would have us going out if we traded under the low of today, which came in at 65.83. So I'm making note of all of that. And I hope everyone is recognizing why we are thinking about the low of today to build our exit strategy. If we are wrong about everything that we believed in the short run, the 50-day moving average crossing the 200 to the upside, this being an area of short run support, even if we bought tomorrow morning at the open, if this broke down and traded under the low we made today, suddenly the odds are working against the bulls then. And that price action shift could be reason enough for bullish traders to move on from the trade and say, that's just bad timing. We're going to protect our capital. Hence the use of an exit strategy, in this case, stop orders. So that's what we're going to do for this example, everyone. We're going to do two separate purchases, both buy stop equity orders, and then both incorporating a stop exit along the way if things don't go in our favor. So I'm going to build this right from here. We're going to do a buy custom with stop. No target on this one just yet. Okay, so just an entrance and then a stop exit if we get to it. All right, so we are going to look for our first order is that stop, and we're going to go with this for tomorrow only. And the reason I'm saying that from our example purposes, I just don't want this to hit later on next week. If it gets hit tomorrow during the regular market, terrific. We will go with it and we'll see how it plays out. I just don't want to leave it active for longer than that. My encouragement is reevaluate a trade that did not hit day one. Maybe it hits a little later. Never a bad idea to give it the opportunity to meet your details, but also not a terrible idea to simply reevaluate once you have more data. And after a full day tomorrow, you'll certainly have more data for consideration. So our first buy is at 67.70. That's our buy stop on these, whoops, there we go, on 50 shares. And our exit of those 50, we will put to good till canceled, right? And then that is going to be at 65.83, and then I'm going to come beneath that by about a quarter. So let's just say 65.58. That's not a round figure at all, and we would have to fall through the low we made today, again, increasing the likelihood that that's not wonderful. Now, reminder that a stop order, once triggered, becomes market order to sell. That means that we can't guarantee a price of any kind with 65.58. That is merely our goal, is to, if we traded through that, we'd like to be taken out close to it, but we can't guarantee that price. So we have gap risk associated with our stop order on these 50. So we're going to place that. So we're buying 50 with a buy stop. Got to trade through 67.70 to the upside, and then we will apply our target exit. So we're looking at basically risking about 2 points on 50 shares, or about $100. Okay? And then our second one, and this is making a bit of an assumption that we're going to get put into the first trade, but the second one will be on a move through 69.70 to the upside. So we'll do the exact same thing, buy custom. Here, we're going to change this to $69.70. Again, that is a buy stop for tomorrow's day. And we're going to once more put our stop at the appropriate level for us. We're going to go 65.58. So what this will allow us to do, of course, everyone, is to make an alteration to the exit strategy, the stops. If we get into the second 50 shares like this, which is fine, if we get put in, we get 100 shares and we start trading through 69, 70, and 70 up beyond, we can start to talk about or think about raising our stop order. Okay, but I like the idea initially for this example of having that stop protecting both lots of 50 shares. I hope that makes sense for us all as we're looking at it here. Okay, so I'm going to go ahead and submit the second one. Again, we are doing a buy stop 69.70. No guarantee on the purchase either, everyone. So while our limit, or our stop, becomes a trigger, just like we can sell for a price other than our trigger, we can buy for a price other than our trigger. So be aware here, everybody, that you might be triggered at 69.70. If it gapped above that level, we might be buying at, say, 72, 74. We can buy at any price. So be aware of that. Just remember, you could consider a buy stop limit order as well. That might be a conversation with a representative. Unfortunately, we won't have time to dive into that today. So there you have two example buy stop orders and the thought process behind them for Hologic, which we will see if that works out come tomorrow, obviously. Could be really intriguing. Now, as I mentioned off the jump, we have a number of example trades in our example portfolio, and we need to take a look, everyone. So let's do it. Let's jump over to our monitored portfolio, and we're going to look at, our new orders are going to show up here until tomorrow, and if we get executions tomorrow, I'll apply those to the after the close. I want to talk about a few of these. First of all, I have a position in Apple. Let's look at Apple briefly here. In fact, let's make this, let me see, current account position. We'll just leave it as is. All right, we're going to look at Apple. So here's what happened on Apple. Now, I did not make the purchase of Apple during a segment. And turns out that when we made the purchase of Apple, it was back when I was in New York City for our live event. And I was working around the monitor with a number of attendees of the live event. We were talking about the recent moves in Apple. And this is what we noted was a broken downtrend and a broken level of resistance. In fact, we made purchase in this example portfolio based on this candle right here, having moved through former resistance, with the expectation being perhaps that we could begin a new uptrend. And we did, in fact, get just that. We've had a little bit of a pullback right through here, right? But that pullback seems to be over, as the last 3 days have given you a bit of an indication that we have closed above the high from our low day. Our low day was back here on August 21, and we've only seen upside momentum since. Now, we have an existing closing order on this. Let me show that. So here is our stop, and here is our limit. So we have an exit strategy to sell at 239.58 if we can get there. We also have the exit strategy to sell with a stop at 220. We could look to capture a little bit more of the profit scenario by raising the stop, but we might also put ourselves at risk of getting stopped out before the trend really breaks. So the trouble here is that we've got a rising 20-day. Some traders might feel good about that. We could raise it under there. We also have the 200-day right above the exit strategy. You know, there's really nothing wrong with leaving it where it is here. So I think we might do just that. Let's see if we can get this to make new short-term highs. Trading through 235 to the upside would then allow us to raise this to a more appropriate level for the stop exit on Apple. And it would still allow us to continue targeting the exit strategy up there at 239.58. So I think for the time being, we'll roll with what we have in Apple for now. Now let's look at trades we put on very recently. Just last week, we put on this position in GL. Let's take a look at GL. First of all, let's talk about what we've got. We have the 100 shares. We have an exit strategy, and you'll see that we've broken the downtrend line off the peak, and we do have an exit up above as well. So we have an exit for profit, an exit for stop. And I think once more, even though the stock has managed to move higher, we may not necessarily want to raise the stop just yet. Doing so once more could kick us out before the trend truly breaks down. Could a trader raise it to this 137 zone and capitalize a little bit? Sure. You know, we're currently at just shy of 134. So we could look to raise that stop by about $3. But again, that would possibly kick us out too early. I think for our example purposes, we'll stay the course on GL. What about Western Digital? Here, we have a $5 long call spread in Western Digital, which we just put on very recently. So that was just last week. And it got applied on a buy stop, I would imagine, or a buy order padding our limit, because if we looked at this on our, let's see here. Actually, we're going to go to the trade page, back to the account statement page, and look at our orders on WDC. This will give us a little more clarity. Yeah, so we bought the vertical for a net debit. We wanted to be in at $1.83. So that worked out for us. We got put into the trade. Go. All right, so we have the position working in our favor, right? We have about 50% profit, and we have the $5 spread. Now let's look at WDC on the chart to see where we reside. So the fact is that we are already through our $80 strike at the close here today. Now, what we need, because we have 2 weeks of time remaining, we could look to take this trade off and walk away with our net vertical profit here of about $2, $200 total, which is working very fine. But you know, the alternative here could be to take a small loss on the short call if we wanted to let the long call run. Now, this is at the trader's discussion, right? The trader's concepts need to come into play here. Does the trader feel like there's more upside opportunity? Does the trader feel like they've made a sufficient amount of profit relative to what they wanted to make? I'll remind you, when we look at the way that this trade breaks out, we have a $5 spread that cost us about $1.85 to put on, and it's valued at, we have a profit of about $200, right? So some traders would just say, hey, we've made 200 of our 300 max profit. Why don't we go ahead and take that $200 off the table? There'd be nothing wrong with that. So let's go ahead and build an exit strategy that will have us doing just that, everyone. So I'm going to simply right click on the WDC, and I'm going to say create closing order, and we are going to do it for the entirety of the vertical spread. So here we're just saying, we know we got in at about $1.83 per contract, right? And the net credit here would be for $382, which means we would walk away with about $200. If we can get the extra $18 out of it, maybe we want to do that for a flat $4 limit, which would be fine. Obviously, the stock needs to give us a little bit of a boost. So the question to the traders becomes, do you want to sell it as it's running upward? Do you want to sell it no matter what? Meaning, should we give it a padded limit beneath us? So instead of $4, maybe the trader says, I'd walk away happily if I can get at least $3.50, and recognizing that, again, the mid is about $3.82 here. So if it opened where it closed, well, then right here, if it opened where it closed, we would still be selling at the better price. Remember, this price or better. So the limit might be $3.50. We might still get executed at $3.80. All right. So let's go with the lower limit, the padded limit, with the intent of exiting this trade at tomorrow's open. And we'll have to see how that plays out. All right. So we go ahead and hit confirm and send on that. And that's what we've got. So we have placed a couple of new example trades for you, everyone. We did example long buy stop order trades on our unallocated position here. We looked at that on HOLX. We also built a new example trade, a $30 long call vertical spread on CrowdStrike for the month of October. We built that with a padded limit, the hope of getting into that one at the open for tomorrow, and looking for about a 1-to-1 risk versus reward. But that gives us an ample amount of time to monitor that new example trade as we go forward for the next few weeks. So I want to thank you all for joining me here today. Obviously, appreciate you doing so and keeping the conversation going. We will continue the weekly review here in After the Close next Thursday as well. Big thanks to Scott Thompson in the chat, who was managing quite a heavy workload today. So why not? Big thanks to Scott for making sure that everybody's questions got answered. And I'll just remind you once more that our representatives on the phone, look, I was there a long time. I spent about 17 years at Schwab talking to all of you on a one-to-one basis. And I can tell you, as a broker, there is nothing better than having a conversation with another trader who needs to learn something about their strategy or needs some guidance about their process. They're not going to tell you what to do, but they're going to give you options that traders might consider. And often it's simply discussing those processes and those concepts that lead us traders to making the decision that is most comfortable for us. So never hesitate to just lean into a conversation on the phone with a broker who could just give you some additional insights into your thought process and maybe help you out a little bit. So don't hesitate to do that. So again, thanks for being here. Hit that thumbs up if you liked the conversation, everyone. And don't forget, we did have a survey opportunity. So if you'd give a score, make some notes, I'd love to hear from you. Those come directly to me. And if you spend the time to make those notes, believe me, I will spend the time to read them. So thanks for participating in the show, everyone. I hope you all have a fantastic rest of your Thursday. I look forward to catching up with you all again real soon.